In today's volatile foreign exchange market, we need to work harder to protect against currency fluctuations. At AFEX, we do the hard work for you. By understanding where your exposure lies, we will create a tailor-made strategy to fit your needs. Our customized solutions are designed to take the uncertainty out of your global payments so that you can stay focused on the road ahead. Call our team today for a free risk management consultation.
Good afternoon, everyone. My name is Lawrence from the Australian Trade Logistics Corporation. I'm just going to allow a few more minutes for everyone to join this webinar. We've got a couple in counting already jumping on, so I'll just allow for an extra few minutes, please.
Is it okay? Do you want to secure it? Are they talking to you?
All right. Well, what I'm going to do now, it's just after 1 o'clock, and we're about to kick off today's really important webinar on what's in store for the Aussie dollar, not just in 2021, but leading up into 2021. So joining me today on this webinar, we've got James King, who's a state manager and FX expert here in Melbourne. Hi, James. Thanks for joining us.
Pleasure, Lawrence. Thanks for having us.
And Marc Lim up in Sydney, another FX specialist and based out of the AFEX office in Sydney. Thanks, Marc, for joining us as well.
Hi, Lawrence.
Great. So, gentlemen, look, it's been a real tumultuous year, to say the least, as we all know, and there's so many things still going on and unraveling, things like the US elections, China, COVID, then we've got Brexit, there's a whole new latest RCEP free trade deal as well. There's so many things that have been going on through 2020. And as we move into this last month and a bit of 2020 and into 2021, we wanted to put this webinar together to give all the importers, exporters, and supply chain service providers a bit of an insight about what they could prepare for, what they can expect, and if this year's taught us anything, you've got to be prepared as much as possible for the unexpected. So it's a real pleasure to have you both on. I'm going to kick off just on a couple of those key topics that I've just raised, if I could. So starting off with you, Marc, tell us about, we want to try and understand what potentially could happen. And I know you're not a fortune teller or psychic, but what do you think the current situation started with China and so there's trade tensions, how is that going to impact the Aussie dollar in the markets? And what do you think going on in the future?
Yeah, I think China is a really interesting one because whilst it was a huge, topic of discussion and topic locally here in Australia, particularly because of our very important trade relationships with China and leading up to possibly the midpoint of this year, the election's really taken over from that since about the July time, and we've really seen what we saw in the previous administration, the Trump administration, that anything to do with China trade was really off the topic of conversation leading up to the election. And through that period, what we've seen, obviously, is just a focus taken away from it. And I think what we saw in the last couple of weeks, which was really interesting, was, China making the first move in terms of our trade relationships and cutting back on imports of Australian goods. We saw that with beef. We saw that with wine. We saw that now going into the other parts of agriculture. So the concern then is that does that then move into iron ore? We know that there's China have got a building relationship with Brazil, currently widening the ports over there in Brazil, because the main issue with iron ore coming out of Brazil is that it's just getting the shipments and the volume across to China is not quite there because the infrastructure isn't in place. So I guess the concern regarding the trade relationships with Australia and China is, does that continue to deteriorate under the current government? And perhaps maybe did we jump the gun a little bit by joining in with the US when Trump was accusing China of being the cause and perhaps a inquiry into how COVID began and was spread. Perhaps maybe did we jump the gun there by jumping behind the US and China now putting their foot down and making us pay for that. So that's a really big thing locally for Australia to be looking at, because now with the incoming Biden administration, how will they handle trade with China? Will they perhaps maybe wind back on tariffs? We do know that there's still phase one agreement figures and targets that China have to meet in terms of that agricultural import with the US to get to the phase two on those trade requirements. So yes, it's a huge, I think probably it's a huge story for, I think, Australia in 2021. It was so in 2020, 2019 and 2018. But I think just in 2020, we saw it come off just with the focus on the election and COVID. But I do think that, in the coming months, we're going to start to see that coming back into the, the headlines a lot more.
Yeah, thanks, Marc. I want to come back to Biden a bit later on, and I'll probably throw that one to you, James. But, Marc, just before we move off the China part, this regional, the new free trade agreement, with that whole regional focus, I think it's 15 countries now that's just been signed off on, not ratified yet, but signed off on earlier this week. How do you see that playing out when it comes to our access to try and build those bridges with China, Marc?
Yeah, I think that's a really good question, because building bridges is going to be difficult when we know that earlier this week, we tried to get some lines of dialogue with China going, and no one was answering the phone. So they're probably not quite there yet. And you wonder whether or not it's going to mean perhaps a change in government for that to happen. Or perhaps maybe, as I mentioned before, the change in US government might just be that catalyst just to perhaps put a little bit of, water on the fire and just sort of settle things down, because we know that there's been a very antagonistic sort of view towards China. And look, they've got a huge buying power. We know that. Australia's relied very heavily on those trade relationships with China. We're now starting to see those get wound back. And it's going to impact our economy hugely. And we know already with the impact on that $6 billion alone, it's going to impact the beef industry. It's going to impact the lobster industry as we head into Christmas. We might get cheap lobsters here in about a month's time, but that's not good for the industry as a whole. And look at the wine industry, Penfolds, obviously with Treasury Wines, looking like there's going to be a glut on that side too because of restrictions. So that's absolutely huge for us. And I think another big one is education. Where we're starting to hear that over there that they're actually winding back and actually advising, Chinese families and students that, to try and look elsewhere outside of Australia for that education. We know that's in our top 5 or 6 industries within our economy. So we rely heavily on that. So those trade agreements, are absolutely vital for us moving forward as we're coming out of COVID as well. Obviously, as an economy, much better handled the COVID situation outside of Victoria. But definitely without China, we're going to have a really steep hill to climb, in 2021 when our interest rates are already much at zero as it is.
Sure, Marc. I think there's another couple of points I'd love to sort of tease out with you a bit further. You just mentioned. So the student part, obviously, you touched on COVID there. I want to ask if you could expand on how this may impact, the markets. You look at, recently there's been a lot of excitement about the potential for a few vaccines. I think there's about 3 or 4 really exciting vaccines on the market, or about to come onto the market, hopefully. How do you see the COVID situation, panning out if the vaccine arrives, let's say, in the next 3 to 6 months, but also from that travel perspective? You mentioned the education side, the overseas tourism side. With Australia, we are so far away from every other continent that we rely so heavily on that overseas travel for inbound investment and tourism dollars and education dollars. If the vaccine, I'll ask it in 2 questions. So what happens if the vaccine is available in the next 3 to 6 months? What do you think the effect will be on the markets here and globally? And obviously that's tied directly related to the overseas travel capacity. So those 2 sectors, education and tourism, what are your takes on that with COVID?
Yeah, I think there's 2 parts. There's the overseas story, there's the local story. I think, locally, if you speak to anyone in the UK or Europe or the US, they have a very different view on how things are because they're currently either still in lockdown, potentially going into lockdown, or in a phase of coming out of lockdown or going back into. So, we look at the news here and we see 25 cases in Adelaide and the economy shutting down. It's hugely different when you've got numbers like 150,000 cases a day in the US and 1 in 400 people in a population close to 400 million contracting the virus. That's staggering numbers, that we're compared to what we've experienced over here. So I think that as a vaccine is concerned, it's great that we're seeing these positive numbers, and obviously it's going to take 3 to 6 months to roll out. I guess the question for the UK and Europe and the US is that, as some experts are saying, is that if it takes 3 to 6 months and we're seeing the rise in infections at this current pace going into the winter months in the Northern Hemisphere, is a vaccine even going to be enough to eradicate it at that point if it's so widely spread? So, one is the how quickly it's able to get out, and two, how quickly will it wind back? If it is so widely spread. The other point about locally, I think, is interesting about COVID is that whilst tourism is a huge part of our economy, I think what we're seeing now is a lot of people have saved a lot of money through COVID and through shutdowns and through not being able to travel this year, that everyone is really, really excited to get out there and do things. So whilst we can't go overseas, I think places like Queensland and the northern parts who do rely on tourism over the summer months will probably get a pretty good injection from just domestic travel from the southeastern states and the likes of Perth. So I think there's going to be a lot of money spent internally in Australia. New South Wales has rolled out a spending, it's a $100 voucher for all New South Wales to go out and spend and spend on entertainment. So I think there's going to be a big, spending spree within the Australian economy. But in terms of Australia looking out externally, I think that we really have to be concerned about what's going on in the US, because they're crying out for a fiscal stimulus package, which they've been trying to get through all throughout the election. There's talk that it's going to be, unveiled come January or February. But, as we're seeing, we're not seeing a smooth transition with the election. So with the new Biden presidency moving in, are they going to be able to get that package out to the market and to the US citizens to be able to roll out that support that they desperately need? And on top of that, then, will the Federal Reserve have to step in to do something as well? I think we're going to talk about that a little bit later on. But there's a much bigger story, I think, outside of Australia. And I think that what we're seeing this year, especially in terms of currency markets, is that a lot of where we've seen the Aussie dollar move is on the back of swings in the US dollar. And recently, US dollar weakness has been the story. And the question is, does that continue into Christmas and into January because of the ongoing trend?
Yeah, there's a lot to keep watching and waiting to see how that unravels. James, if I could bring you in now, I wanted to ask about the central banks. I mean, there's so many things that they've all been trying to do frantically to prop up economies or create stimulus or give some sort of buffer with everything going on with the pandemic. What do you think is going to take place around those major markets here in Australia, and what do you see happening in 2021, James?
Yeah, sure, Lawrence. It's been a busy year on the central bank front. At the start of the year, there wasn't a central bank that had interest rates at zero or negative. Well, they do now. And at the same time, if there wasn't a central bank that wasn't printing money, as they say, quantitative easing, they are either doing it now or they're about to do it. So there's been a really big change in the dynamic there of how central banks are operating in the current environment. Next year is the key question as to what transpires there. And you look at the main central bank being the US Federal Reserve. They've got a busy task ahead of them. With Joe Biden likely to take the presidency I say likely because it still yet hasn't been ratified, but it's extremely likely that will happen. He's a big spending president. Even looking at the stimulus package that the Democrats are looking to pass there in the US right now to try and help with this COVID situation, the Democrats are looking to open up the purse. So the funding for that has to come from either the wholesale banking buying bonds or the central bank buying bonds. And I envisage that the Federal Reserve is going to be a main player in that program. And as the US continues to run huge budget deficits, then that money printing by the central bank is no doubt going to continue. And that's going to have implications for the currency markets. The question posed before there by Marc was, as to what impact that might have on the US dollar. And that's a key question. We just don't know. And then you flip it around and you look at central banks, and to keep the Aussie dollar in the frame here, you look at the Reserve Bank of Australia, and there's talk now about the central bank looking at potentially looking at negative interest rates, in an attempt to try and boost spending, so trying to deter saving and make people spend, and also talk about them engaging in even further quantitative easing to, again, similarly to the US Fed, to be able to fund government deficits into the future. And again, what impact is that going to have on the Australian dollar, the flooding of all this cheap currency? And that's the question on most currency traders' minds right now, as to which is going to have the biggest impact, the Federal Reserve or the Reserve Bank of Australia. So it's a really tough question to answer. But one thing's for sure, I suspect that volatility will remain in the way in which currencies trade leading into 2021.
Oh, really amazing points, James. And one of the things that I'm thinking, and I'd love to get your advice and feedback on this, is the central banks, the Reserve Bank, there's only so much they can do. Once they hit those rock bottom numbers that we're talking about, it really sounds like the governments then need to step in and create those stimulus opportunities where the banks can only do so much, and then the rest is up to the leadership of the relative governments. Would that be correct, like you said about the stimulus and how they, whoever's in charge, whether it's ScoMo here in Australia or Biden in the US, it's up to them to put in place initiatives or policies to really get consumers spending and business working again.
Well, that's the mainstream view there, Lawrence, that central banks and others are crying out for this spending program by governments around the world, and our government's no different in that regard. I don't necessarily believe that's the best way forward, but that is the mainstream view. Look, I sort of question as to why are we in this position in the first place, and all we seem to be doing is kicking the can down the road with these measures, whether it be central banks or governments. It's immaterial. We seem to just be kicking the can down the road. So until there's proper reform, I don't think that we're going to, we're not going to be in a position where we can try and get through this period in a better shape. What we're doing is we're just adding more fuel to the fire, and at some point that's going to blow up. And you look at the GFC, you now look at the economy's reaction to COVID this year. If we just keep adding fuel to the fire, what does the next downturn look like? And I can only guess that it's going to, it will dwarf the GFC. So I think we need to have a proper discussion around, what the way forward is. That's me being idealistic, though, Lawrence. So the mainstream view will no doubt be what happens, and the central banks and people in the commentators, etc., will be calling on that government stimulus.
Yeah, I think there are some really daunting or even scary times ahead if people get it wrong with the governments. And I think the lockdowns or the second waves or even third waves in some countries that are starting to occur is quite a scary situation where unless this vaccine or things become more opened up and free for people to even spend money, is going to be a real challenge. But I want to just share screens and put across some of your charts and just open that up to both of you if I could. Just bear with me. I'll do that now. Great. So James, I'll ask you, can we, what are you seeing here on the charts? And then I'll bring Marc in as well. And, we'll sort of get both of you to cover this off. I mean, this is something that most of our viewers, and myself included, you look at this and think, what the? So it'll take FX experts for you, like you both, to just explain what this all means to us, importers, exporters, and so forth.
Yeah, sure. I mean, this is a chart on the Australian dollar against the US dollar, first of all. It's for the calendar year of 2020. So we can see there at the beginning of the year, we started trading at around the 70-cent level. By the middle of March, the Aussie had collapsed and was trading down at 55 cents. That was the peak of the COVID euphoria at the time, and markets fell into a tailspin. That was all markets. There was huge movements in equities, huge movements in commodities, bonds, and currency markets, of course, as well. So the Aussie dollar lost all that ground, and now you can see that there's been a very strong recovery in the Aussie dollar over this time, to the point where we are now trading at a higher level than where we were trading at the beginning of the year, pre-COVID. So it's been a very erratic year. Marc alluded to it a little bit before, with the Aussie tending to trade more so on the USD side than necessarily on the Aussie side. So the US dollar's lost considerable value since the middle of March there, and as a result, the Aussie dollar's managed to track higher. So it's been a remarkable recovery. To me, it demonstrates a few things, how unpredictable currency markets can be. And for those that aren't directly in the markets, so those who perhaps are importers or exporters, anyone who's got exposure to foreign currencies, you can see that you don't want to be reliant on a currency trading a particular way, because it can very easily move one way or another in a very quick time frame, and that can catch a lot of businesses off guard. And you don't really want to be focusing on the markets when your bread and butter is selling widgets or whatever it might be. You want to be focused on that. So this just demonstrates to me the volatility that can potentially happen in a currency like the Australian dollar.
And that's it really stands out, like the proverbial, when you look at it on a chart like this. I mean, if you're doing business and you factored in your export sales pricing or import buying rates at around this rate here, and it just dives, almost pretty much free falls straight off the cliff. You're so exposed from a profit, even to make sure that you can to make ends meet. That's such a volatile chart there that it really does emphasise the importance for importers and exporters to really put in place proper strategies, buffers, a framework, an FX framework that is going to help them, because next year, there was a funny thing I saw on the news, I think this morning, where everyone's looking forward to the end of 2020. And there was a bit of a meme saying, well, Mad Max was shot in 2021, well, set up for 2021. So people, you never know what 2021 is going to hold for us either. But it does really show quite dramatically here how unpredictable things are right now and how quickly they can drop again if Europe goes into another major tailspin, more lockdowns, more disasters with the virus. If the vaccines prove to be ineffective. There's also talk about the fact that already the vaccines that have been developed, if the virus keeps mutating, they could be ineffective again in 12 months' time. So that, combined with the US Biden election, any court appeals and so forth to Trump, the ability for them to actually get things passed, as Marc alluded to as well before, there's a whole range of unknowns going forward over the next 12, 18 months. So I'm just going to stop sharing here and I'll come back to the screen. So, Marc, I'm just going to bring it back to you for a sec. So some of those scenarios I just threw up to you, and I'm sure we want to invite some questions from the participants and audience as well. But I'd like to ask, so what's the effect on the Aussie dollar from Australian importers and exporters here? Out of those couple of scenarios, what could we expect? We just saw that drop off the cliff in March. What are the worst case and best case scenarios, what do you think, over the next 6, 12, 18 months?
Yeah, I think you raised some really good points there in terms of so what are some of the potential scenarios as we go into 2021? There are several of which either one could occur, and also we know timing is a huge thing as well, when these things happen and how close, and how does the market react to those things. And I think what we saw this year is that, after that sharp sell-off, certainly a lot of experts out there were expecting potentially another sell-off at some point this year, which we just simply haven't seen. When I say sell-off, I mean a risk-off type effect, where you see a selling off in equity markets and a real sort of run to safety in terms of investment vehicles back into treasuries and the likes. But we've actually seen quite the opposite. Despite, as we were talking about earlier, being right in the depths of this second wave outside of Australia, anywhere that's quite cold at the moment, actually, if you probably put it that way, is on the rise and almost back to the March peak. Equity markets are still flying, and equity markets are doing very well. Everyone's out there trying to invest and make something with their money. So that in alone, it's a really difficult one then to try and predict, because the amount of positivity being willed into the market is quite amazing. And what you've seen in terms of a correlation, and James was talking about the Aussie and how it's traded this year, from when it dipped off and it's just been coming back and back and back and higher and higher. It's actually very, very closely aligned with US equities. And if you looked at the S&P, there's the Dow and the NASDAQ, but more closely the S&P, it's almost tracked the S&P through the last 9 months as it's been coming back off the lows. So what that tells us is that of all those scenarios you mentioned, and that all of them are potentially possible. COVID, yes, we have a vaccine, but then does the virus turn into something else, and that vaccine is no longer effective, and it continues on into the year, and economies have to shut down again. For example, maybe there's the delays on fiscal stimulus, the package getting out, because the Republicans in the Senate aren't making it easy to get that bill passed. So, so many different permutations it could take next year. And how will that affect the risk-on sentiment in terms of what we're seeing with the equity markets hitting all-time highs at the beginning of this week? Will we see further highs? And if so, Aussie higher. If we start to see, perhaps normally at the end of the year, we would see what's called a Santa rally. Everyone getting a bit excited leading into Christmas and investing a little bit more before they, take off for Thanksgiving and Christmas and whatever holiday, you're having. And if we don't see that this year, perhaps maybe we see equity markets come off and the Aussie come off with it. So I think to try and simplify it all down, how I try and look at it is that, what are we correlated against? And lately, as in this year, it's been the equity markets in the US. All signs are pointing to further moves higher, in that the uptrend isn't over just yet. But that doesn't mean that we're not susceptible to perhaps a dip leading into Christmas, perhaps into the new year, if we do start to see investors just say, do you know what, we're not so sure this vaccine is just around the corner, or perhaps, we start to see more shutdowns in the US. Last night we saw New York close their schools, and more pressure on state governments, and they've all been acting independently over in the US, perhaps maybe wind back the reopening of their economy individually. Then do we start to see a bit of fear ripple back into the market? Well, then what we're going to see is the Aussie move lower. So I think that for me, that's probably the simplest and most effective barometer at the moment, and as we're really just a risk-on, risk-off currency at the moment. Because what we're seeing is when the equity markets are going up, the US dollar is weakening. When the equity markets are coming down, the US dollar is strengthening, because investors are moving into safety, such as US treasuries, bonds, which pushes up that US dollar stronger as well. And then, bring in Europe and the UK. That's a whole other story, perhaps for another time. But, you've got Brexit, you've got, what's going on with the UK. They've shut down their economy, concerns over Northern Ireland and how they're going to play all that out with their trade agreements. And, there is just murky water, really, wherever. If you're trying to read the tea leaves, it's pretty difficult.
Well, thanks, Marc. That's some really great points, and it leaves so much unknowns out there for importers and exporters. I want to ask you, James, what are the tips and advice? I mean, both of you as FX experts, no one's seen this pandemic. It's a once in a lifetime, once in 100-year pandemic. Yes, you touched on GFC early in the webinar. What are the lessons learned here? What should importers and exporters take away from this uncertainty? The fact that there is still so much to play out, and there's probably going to be other things thrown in the mix of 2021 as well that none of us could predict. What are the lessons learned? What are the takeaways that you guys as FX experts are talking to your clients about? What sort of advice do you give them to buffer these, unpredictable situations where they can at least stop profit erosion, give themselves some strategies to say, yes, we don't know what's going to happen, but what are the types of things that we can put in place to lessen the risk?
Yeah, look, the first takeaway I think of is that by what we've discussed over the last 20 minutes or so, it's neither Marc nor I have really said that we think the Aussie dollar is going to be here or it's going to be there, because there's just so many unknowns. There's so many variables at play. And I think that you bring that back to business, and you just don't know what's going to happen. So bring it back to your business. Bring it back to how do you conduct things within your business? How do you sell your products? How is the pricing gauged for those particular products? Do you set pricing for a 3-month period, a 6-month period, a 12-month period? In which case, if you know that you're going to be importing or exporting, for that matter, if you're going to be, but I'll talk about it from an importing perspective. But if you know you're going to be importing the same product every month for the next 12 months, but you're setting fixed pricing, well, then you need to make sure that you're protecting your gross profit margins. Because if you're reducing your gross profit margins, then that's going to impact your profitability, potentially impact the way in which you conduct your business, and also you might need to start looking for savings within your business to offset those reductions in profit margins. Perhaps it's headcount that you lose within your business. Perhaps it's simply that the directors and owners are reducing the revenue that they're generating out of the business. Whatever the outcome might be, I think it's important, though, that you bring it back to the basics and make sure that the FX strategy that you implement aligns with the way you conduct that business. If you get that right, then you can take the markets out of it. We'll no doubt talk about this in very shortly, but making sure that you've got the right balance between protection, flexibility, potentially outperformance, whatever's required within your FX strategy to help you meet your business goals and objectives. And if you can help solve business problems within your business by using an FX strategy, then great, you're able to use it wisely to help protect your business overall.
Yeah, great points, James. I think that what surprises me is that we deal with importers and exporters right across different industry sectors with ATLC and with the channel, and it's even the large companies don't invest, in my opinion, enough time on that FX strategy in its own right. They've got their banks, they've got their stuff around their forecasting, cash flows, and so forth. But they almost are very complacent with the FX strategy piece itself, or lack of, I should say. I think that if we look at some scenarios that you both touched on before, I wasn't sure if it was Marc or James who mentioned this, but a lot of people have been saving money. And what I've noticed especially in the last month here in Melbourne, is that people are starting to look at, I can actually start importing more product, or, I can try and buy more of it because I've got more, I've saved up some dollars where I didn't spend that before on other areas. So whether it's a consumer spending or even as an importer, I want to buy more in bulk because I've had in the past a lean supply chain strategy, but now they've been burnt by supply chain disruptions. So they're going for bigger orders and bigger inventory management. So when you look at those factors, many companies historically, when you look at their supply chain, the historics in many ways are all out the window, right? So that's one of my questions to you, Marc, is the historical data, what people have thought of and where they plan their business on. Would you agree that's pretty much a blank canvas now to try and rethink as James said, your strategy and your forecasting?
Most definitely. I think you hit the nail on the head there, absolutely. In terms of how we're seeing businesses, and I think we're probably yet to see it as much in Victoria because you're only really coming out of the lockdown, as of the last few weeks. So it's probably going to be a couple of months. And if we use Sydney as an example, we came out of lockdown in July. Slowly filtering back into the city. It takes a little while after 3 months of everyone being at home for everyone to feel confident to get out and about and, come into the office and go to the shops and spend time at the shops and, social distancing and all those types of things. And I think it'll be probably in a slower process for Victoria, having been the best part of 7 months or so in lockdown. But eventually that will happen. And I think what we've seen in Sydney is you've got people who are cashed up. They've saved money through COVID. Businesses that struggling, but also businesses are doing quite well. And we speak to businesses every day, and it's surprising how many have actually taken opportunities this year that perhaps weren't available to them in the form of expanding and getting warehouse space and expanding on their office size because people are working from home. Landlords have had to cut back on rents, and businesses have decided to cut down their office size because they're not using it. So there's a lot of companies out there that have actually been taking advantage of great commercial rates on space, renegotiating, and particularly I spoke to a customer just this last week who got a huge warehouse out in Newcastle for half the price they would have paid for it last year before COVID. And on top of that, from a individual standpoint, you're seeing a lot of people now, because they can't buy properties overseas, they're buying coastal homes. And if you go up the coast and you look in the real estate windows, there's a lot of interest and there's a lot of people, and the prices are actually going up. So I think you can't withstand the fact that we're a lucky country. Whilst there are a lot of people out there hurting, there's also a lot of people who've been capitalising on opportunity. So I think, there's a changing landscape, as you said, where you've got more people working from home. I think Australia probably different to the UK and US, where they're a lot more used to working from home. Europe as well, and flexibility, those types of things. It's been part of their culture for a while. I think that's now started to twig since COVID this year. That, people can work from home, and productivity doesn't necessarily go down, and then you don't need to be spending all that extra money on office space. You can put it into other parts of the business. So I think you're right. The changing landscape certainly will potentially be an ongoing story and factor into 2021 for sure.
Yeah, thanks, Marc. Yeah, I think there's definitely a lot of new ways to do business, and that coastal push I've heard as well is because people now are used to working remote. The commute is a big opportunity for them to.
Yeah, that too. Try and get a property in Manly right now. It's impossible. Yeah. You've got to get a rental property by the beach.
James, I'm just going to open up to the participants and audience for any questions. So all of you out there who have just heard all from Marc and James about so many things that are taking place around the world. Your head's probably spinning as much as mine is with so many things that could or may happen, and each of those levers may impact the Aussie dollar, the markets, and there's so many things that we don't know. But many of you out there may have some questions that you'd like to throw at our experts, the FX experts in Marc and James. So please don't hesitate. Feel free to send through any questions, and I can even open up a channel so you can ask the question directly as well. So now's your chance to, if you've got something that you'd like to ask, please feel free, and I'll moderate that on your behalf. In the meantime, as those keep coming through, we'll open up those channels. 1 second. Ramesh. There we go. Right, we've got Reshma. Go on. Hi, Reshma. How are you?
Good, thanks. How are you, Lawrence?
Good, thanks.
Yes, it was a great session. Thanks, gentlemen. One question that I had was, we see that the Australian currency is improving. You know, the rate has improved in comparison to, say, with India. At least within the COVID time, the Indian currency has dropped fairly. So I just wanted to check, because we're doing well as a country, because Australia is coping up with COVID really well, probably a world leader at this moment. Do you think that will have an effect in terms of trading? Because in India, the currency is getting weaker and weaker. So how do you see that when other third world countries or developing countries, they're not able to grapple with the situation and their currency is weakening and our currency is improving and strengthening? How do you see that gap?
Thanks, Rishma. James, you want to have a stab at that?
Yeah, I just there's a few things to look at there, Reshma. Thanks for the question. Yeah, it's all relative, right? The way in which the currency is trading, and that gives either a competitive advantage or disadvantage on the global trade perspective. When you're looking at the currency side of things, the Aussie dollar, and as Marc mentioned earlier, it's really benefit from the surge in risk assets in recent time and tracking that S&P 500 to these levels, which has led to the Aussie dollar appreciating from 55 cents back in March to 74 cents at the high, or 73 where it's tracking at the moment. The Aussie dollar has been a benefactor of those moves, whereas a lot of those emerging markets, countries and their currencies, where they've got their own currency, of course, but a lot of their debt is held in US dollar terms. They've suffered some weakness in their currencies as a result, and so from a trading perspective, they're potentially at a disadvantage when compared to a country like Australia, and I mean that provides opportunity as well for businesses here in Australia that may have links to countries like India. I think India as a trade country for Australia has a lot of upside. It's really been untouched. We've sort of been we've gravitated towards China over the last 30 or 40 years, whereas India's almost been in the shadows. So there is a lot of opportunity within the Indian country as well for Australian businesses to engage, and no doubt that will be a two-way street as well, where there might be some services aspects that are now sent offshore to places like India, that again creates opportunity for both sides from a trade perspective. Thanks,
James. I've got a question from Jeff. Hi, Jeff Palm. Thanks for joining us. I'll throw open to both of you. This one is it's $1 million question. I'm sure you probably, if you got $1 for every time you've been asked this, you probably won't be here today. But what's your prediction for the US Aussie average for 2021? So thanks, Jeff. I knew someone would ask it, so it was good. But we'll put the boys on the spot.
I could take this one for James, but we do get asked this question all the time. The reality is that nobody knows, and that's the one great thing about currency markets. As convinced as we can be of our own stories, eventually the market always proves us to be wrong. And I always like the old university quote that I got from my lecturer, who said, 10 economists, nine got it wrong, one got it right, he got lucky. And that's normally how it goes when it comes to forecasts, when you look back on things, especially from the banks. But look, I think the main thing is that there's two major outcomes here. Where do we see, in terms of the global economy, in terms of positivity or negativity, in 6 months' time and 12 months' time? And I think that largely relies and depends on the scenarios we put out earlier. One, do we get an effective COVID vaccine? In the event that we get an effective COVID vaccine and that gets laid out to the markets and we see economies reopen, travel reopen, flying internationally reopen, and effectively business back to usual, then I think the Aussie will be higher. I think the equity markets will continue to ramp up, because whilst we're at all-time highs, there's still a lot of smart money that's sitting on the sidelines just waiting to be deployed around the world. So there's a lot of cash, which is you just have to look at Warren Buffett. He's got mountains of cash sitting on the sidelines, ready to go when he feels that the green light is there. And the vaccine is that. On the other side of that, the vaccine comes out, we are going to see all those COVID-related markets like the tech stocks, the likes of Netflix and Zoom and all these types of industries be affected, which have benefited, Marley Spoon, the likes of home delivery and things like this, online purchases, Kogan, Amazon. So all those areas will probably decline, but everything else will just go flying. And I think the Aussie dollar will go high with that. If we don't see a vaccine, if we do see a continuation of this second wave, continuation of lockdowns and really, just a limited amount of movement globally, I think we're going to see the Aussie maybe suffer from that, but perhaps maybe more sort of sharper little downturns. So I still think that we'll stay around the 70 to 75 mark, but do I see the potential of it getting above 75? Yes. Do I see the potential of it getting back below 70? Also, yes. So it doesn't answer the question, but hopefully we see a far less volatile year than we've seen this year.
Yeah, thanks, Marc. James, I'll put a bit of a twist on the same question to you. So let's say relationships worsen between Australia and China. Where do you see the Aussie dollar potentially going that way in 2021?
Well, they're a big S trading partner. That would catch up with us eventually, you'd suspect. The Aussie dollar doesn't necessarily trade on fundamentals the whole time, though, and that's the thing to keep in mind. So whilst the correlation is very strong with US equities and with commodity prices as well, you'd suspect that that's probably the more favoured input as to what might happen with the currency going forward. If things really do deteriorate, I guess it depends on how adaptive we are as a country, how we are as businesses. Will we be able to move to new markets like India, as we spoke about before? Can we shift our exposure to those other markets in a prompt fashion? Can we potentially source our products from other areas? Whether that's India or other parts of Southeast Asia or Europe or America, wherever it might be, that will. That's going to determine the state and the health of our economy over that longer term. So I don't suspect it's going to be the driving force of the Aussie dollar, not yet, at least anyway. I think you'll tend to find, and as Marc said earlier, that it'll just keep tracking that global sentiment. And if there is positivity in markets, then you'd likely see the Aussie dollar remain fairly well supported. However, if things do turn nasty again, then that's when history would say that the Aussie dollar performs at its worst. So you could easily make a case for it trading either way. But I agree with what Marc said earlier as well, that the likely range is probably still between that 70 and 75 cent level. But we could easily see it. We can make a case for it at least going outside of those parameters too.
Yeah, thanks, James. I've got a question from Wayne, but just before I go to that, I want to ask one of the things I've just thought about listening to you both. Out of the big scenarios, let's say vaccine, the Biden ability to get stuff passed, and things like China, it sounds like in many ways the vaccine and Biden are probably the biggest levers. Would that be right? Out of those three, what would be the biggest impact on the Aussie dollar?
Do you want this, Marc, or do you want me?
I think the vaccine, as we've seen this week and last week, I think you've got to look at where how the market's reacted over the last few months, and I think the vaccine is one that really has a big impact. Because when you see the big jumps in equity, you see a big jump in the Aussie. When you see a big sell-off, you see a drop in Aussie. So I think for me, it's the vaccine, but notwithstanding the power of fiscal stimulus. And if they're able to get a stimulus package together in the next 6 to 8 weeks, which the US economy badly needs, or else you're going to start to see individual states drop into some really serious problems. You're also going to see a big boost on that. But on the other side, if you see headlines where things aren't moving forward, you're going to see drops, and we saw that with the $6 billion trade pullback by China. You saw the Aussie dollar drop % on the back of that, and it recovered over the next coming days. But you see those little shocks on the headlines. So I think that so whilst perhaps sometimes the movement is slower, I think the headlines are where you're seeing those little shock movements, and that's what the Australian dollar is sort of subject to on the downside, and then on the upside, it's more of a gradual move higher on positivity and good headlines. And that's what we've seen. It's almost the opposite to what we saw during 2018, 2019, when the Aussie really was coming off a high at the 80 level, and just slowly over 18 months, every time there was a good news story about trade, or something along those lines, you'd see the Aussie spike up. But then ultimately, because the trade war was going on, it was just slowly ebbing lower. We're now seeing the reverse of that.
Yeah, thanks, Marc. Thanks, Wayne, for putting through the question. So I'll just read this out in case you haven't seen it. Your point on FX structure and planning was valid. My experience in general with importers and exporters is reluctance. There appears to be a lot of thought around tried hedging, however lost, and would prefer to let it ride out in swings and roundabouts. What's been your experience? So, I'll let James. Would you want to have a stab at that?
Yeah, look, I guess in assessing the past performance of FX strategies, I think it's important to do that in greater detail as well. So if you're looking at, you've hedged before and it didn't work. Okay, well, why didn't it work? What did you do in that instance? Were the products the wrong products to use in that environment? Was it the fact that your business needed flexibility, and as a result, by putting in place a hedge that was perhaps rigid, that product didn't suit the business requirement? So I think you have to look under the hood first of all, and get that assessment first. And then in the current state, and talking about what's going to happen in the future, again, bring it back to those business fundamentals. What do you need to achieve from your business? Do you have that? Do you have fixed pricing in place, and therefore need to be able to protect that pricing? Do you have variable pricing, and therefore, as a result, you need to have variability with your hedge strategy as well? I don't think there's not necessarily a one-size-fits-all approach to the way you conduct it, and that's the great thing about what we do here, is that we love engaging with businesses and finding out the answers to those questions, and helping businesses align their FX strategy accordingly. And sometimes that does involve working with other FX providers as well. So a customer might have lines with their bank as well. But using someone like us to work alongside and help, maybe from an overarching perspective, come up with an FX strategy that works for all parties, can be beneficial also. But I think it's important that you're aligning it to those business objectives. That's the key to it.
Yeah, great points, James. I think that the questions have stopped now, but I want to ask quickly before we're just about to wrap up. But and just for all you viewers out there, if you've got any other questions, now's the time. We've got a few minutes left, so you've got an amazing opportunity to speak to some of Australia's best FX experts. Don't hold back if you've got a question, no matter how silly you might think a bit about it. They're here to help. James, Marc, what about the frequency of how often should companies revisit their strategy and their FX strategy? Because I think, probably to what Wayne may have alluded to there, is you can set up a strategy at the start of a year or at the end of a financial year or whatever. And as we've just seen with that chart that you had up earlier, I mean, what you look at in Q1 is very different to Q2 these days. And it seems like as the years go on and on over the last sort of 5 to 10 years, things are becoming more erratic, more unpredictable. So how frequently should companies be checking out their strategies, and especially their FX strategies?
Look, I think it's horses for courses. I think every business is different in that regard, Lawrence. So for those businesses that need to adapt to the market conditions, they may work in a highly competitive industry, and therefore need to ensure that they remain competitive as well. Then you probably need to revisit it quite regularly. Perhaps it's monthly, quarterly, 6 monthly. each business is going to be different. For those businesses that perhaps set their planning in advance for maybe it's for a year, or it could be 18 months or for 2 years, then they potentially don't need to revisit as frequently, because they're setting in place their plans at that moment in time, and that's going to protect them for that particular period. So each business is different, but I think it's important that you regardless of what your strategy is, that you remain in close contact with your FX provider like AFEX, because it is an evolving beast, this market. So you want to stay abreast with the trends and what's taking place, and making sure that you're making the most appropriate decisions with regards to your business in mind.
Thanks, James. We've got another question from Marc Breznik. I hope I've got that pronunciation right. Thanks, Marc. I'll hand over to another Marc. So, Marc, this question is about what is your feeling about the GBP going into 2021? We touched on Brexit very lightly, but there's probably a whole range of factors that could affect the pound.
Yeah, huge. Actually, I did a joint webinar with UK analysts just the other night, so I'm fresh off for some insights locally there. Look, they've got huge issues around their trade agreements with the EU, largely around things like the fisheries side of things, and how can the EU fish UK waters, also with Northern Ireland, in terms of how they manage, that borderline, which has been an issue going back to 2016 when Brexit was firstly voted in. They're no closer to getting that, agreed and sort of getting an agreement in terms of how that trade agreement would look like with the EU. They've got a deadline of the end of December. It was middle of November, but that's now been moved, or about to be moved, sorry. And past the end of December, if they don't get that agreed upon, then there really is no next step. So they're going to have to get something agreed by the end of the year. And they're really pushing to try and get something done on that side. So the pound has actually been fairly resilient the last weeks. Again, going back to our earlier point about the weakening US dollar, a lot has to be given to that. And I think that pound dollar is trading at 132 something today. Aussie pound has certainly been moving a little bit, and it's sort of trading around that 54 cents, I believe. And look, I think that if we do see the Brexit concerns continue going into the end of the year, then we'll probably see that Aussie pound start to creep back above 55. Also, notwithstanding, as I said, the UK is in shutdown and will be for the next sort of 6 weeks. Their cases are rising. And that's going to have a big impact from their economy standpoint as well. So there seems to be a lot of reasons why the pound should be weakening, but it isn't. And I think the reason, as I mentioned, is that US dollar. So it's actually very difficult to try and weave in then how does it move from here? Because what if the US dollar strengthens again, or maybe we see an agreement on that trade front. So I would think from an Aussie pound standpoint, if you're an importer and you're buying Aussie pounds, then there's going to be potential opportunity. And looking to hedge that opportunity shouldn't be missed, because we got to levels of 57 and 58, March and April, when we were at the peak of the virus. I believe it was around there at some point. I maybe got my dates wrong, but that was an ideal time to hedge and to lock in some of those levels if you had hindsight and look back on that. So I think that, knowing where the Aussie pound ranges, certainly I think those sort of numbers could be seen again, in the next 3 to 6 months, and hedging on those bases would not be would be prudent, especially in the short term.
Great. Thanks, Marc. A question on the back of that, just quickly. I know we're only a few minutes out before people may have to drop off, but on the back of the British pound scenario, we're in negotiations with the UK FTA, Aussie, Australian, UK trade agreement. There's an EU-Aussie trade agreement they're trying to get through as well. What impacts would they have, if any, on those currencies with the Aussie?
I think probably maybe to a lesser extent than what the focus is on that UK trade scenario. I think we've got pretty good relations with the UK and Europe. So I think that they'll certainly want to be maintaining those relationships. And I don't think there's any issues on that front. Obviously, we've in past years had great migration and visa relations when it comes to that front. So we've obviously been great contributors to their economies. So I don't think there's any issues on that front. So I would imagine that's only positive for Australia. But I think when you look at the trade flows, and working in the industry we work in, we get to see under the hood of a lot of companies. And the flows that are going to the UK and Europe, are much less than what we see that are going to the US and to China. And if you put it into percentage terms, you're probably saying it was the 80-20 rule. 80% is being traded with the US and China, and then 20% with the rest, Europe and the UK. So whilst important to have those relations, I think in terms of our economy, in terms of inflow and outflow, in terms of the import-export side, maybe not as much. But I think potentially if things start to worsen with China, that will potentially grow.
Right. All right. Well, we'll just hit the 2 o'clock mark. I'd like to thank all of the participants for joining today's webinar. A special thanks to both James King and Marc Lim from AFEX, the FX experts, proud partners of ATLC and the ImportExportTV.com channel. So it's been an amazing 1 hour. As I say, time goes when you're having fun. So, it's been a really informative, insightful session. I think that the takeaways for me are that you really need to get your strategies thought about, get in place, get talking to FX experts such as yourselves to find out how you can best protect your business and your margins and put in place some sort of strategy. If you've got one, revisit it, rethink it, and make sure it's currently up to date, just like every other aspect of your business, as you mentioned, James. So before we wrap up, just any parting words. I'll start off with yourself, Marc. If any wrap-up advice you'd like to give to the audience?
Well, no, I think probably the only thing I would say that further to what James was talking about in terms of how you're hedging and looking at, your import exposure or export exposure over the coming months is that, when you're going through periods of low volatility, as we call it, or lower volatility, when things aren't as uncertain, perhaps maybe things are a little bit more stable, you can afford to look further down the line, longer term, hedging, that is, those currency levels. But, in times of uncertainty and like we're in, whilst things are starting to even out and perhaps not move as much as they were in the first half of the year, that's not to say it won't. So therefore, taking a more shorter term approach is probably prudent. You don't want to say don't hedge because things could go in your favour, because it can also mean that means it also go against you. So perhaps maybe not shortening the time frame. And looking at maybe 3 to 6 months, to the new year. And then when you get to January, February, you can take a view on the next part of the year, for example, if things go positively. So that would be my parting words.
Thanks, Marc. I think, James, it sounds like similar to all the supply chain experts that we hear about, agility, flexibility is the name of the game. It sounds like that from an FX strategy point of view, as Marc just alluded to, that's something to keep in mind when it comes to your FX as well. What are your parting words, James?
I think that this year, if this year has taught us anything, it's that we need to be adaptive to whatever comes our way, and that's the same with our FX strategy as well. The status quo doesn't necessarily mean that you're going to continue to do the same thing that you've done previously going forward. So I think it's important that you're regularly reviewing things and making sure that the strategy does align with your business, what your business goals are, what that desired state looks like, and looking to solve those business problems. That's
fantastic. Thanks, James. Now, just thank you again for all the participants. This webinar will be uploaded onto the channel as a part of the special series. So it is a resource you can go back and refer to, maybe other stakeholders within the organisation to say, listen, I just heard what Marc and James said, we should listen to this. So reach out to the AFEX team. You've got Marc Lim up in Sydney, and for those of you who don't know the email, it's mlim, L-I-M, at afex.com, and James King, J King, at afex.com here in Melbourne as well. So definitely reach out. As you've heard, they've got a wealth of experience and expertise. I like the way Marc put it. They can get under the hood of your business and really tease out where they can try and save you money, improve some strategies, and generally make your life a bit easier. So thanks again, Marc. Thanks, James. Thank you for all the participants. Look forward to speaking to you all again soon. And thank you for being part of another ATLC webinar.
Thanks, Lawrence.
Thanks, Lawrence.
Cheers.
In today's volatile foreign exchange market, we need to work harder to protect against currency fluctuations. At AFEX, we do the hard work for you. By understanding where your exposure lies, we will create a tailor-made strategy to fit your needs. Our customized solutions are designed to take the uncertainty out of your global payments so that you can stay focused on the road ahead. Call our team today for a free risk management consultation.